Hi everyone, my name is Matthew Philip. I welcome you to this video on how to fill the Tony Elumelu Foundation Entrepreneur Financial Model template. This financial model template is also known as your financial template in the business plan. So the business plan financial template that you are expected to populate and submit alongside the business plan narrative. That's the MS Word document that were sent by TEF to the shortlisted applicant in 2024. So I'm creating this video because a lot of mentees in the Tony Elumelu Foundation have reached out to me in several occasions asking for explanations on how to use this template. There are so many of them who have challenge, who do not have finance background, or some also see these templates to be too rigorous or cumbersome to fill. Okay, so in this video, I will guide you on how to fill this template. Okay, I am also going to take you through the features in this template and the process to go through in filling this business plan financial template. Okay, let's get at it. Now, this template is very, very simple and well simplified. Why do I say this? So there are different features in this template. There are different worksheets on this template. The first one is instruction. The second one is assumption. Then after the assumption worksheet, we have the income statement worksheet. Then from income statement is balance sheet. After balance sheet is cash flow statement, after which we have the summary of the whole analysis. Then after summary, we have the glossary. All right. So, but the tricky part of it is that you are only required to work on only two worksheets, which is what? The instruction worksheet and the assumptions worksheet. All right, so you start from the instruction worksheet. So this page, you are to own this template firstly by filling your business, your name. Okay, fill your name, your full name, the way it appeared while registering for the TEF program. Then after which you fill your company name, the company name you use for the registration with the program. Then also fill the email address that you use to register for the Tony Elumelu Foundation. Okay, those are the three information that are only required on this worksheet. They haven't done that, then you move to the next one, which is the assumptions worksheet. This is the only worksheet. This is where your job ends. You are only required to populate this assumption worksheet. You are not to touch the income statement, balance sheet, cash flow, and every other worksheet except for these ones that I've just mentioned. Okay, so you are not required to touch any of them except for all these ones that I've just mentioned. Okay, so having said this, let us move to, let me close all this. Okay, so just like I said earlier, you are only required to fill the assumption worksheet once you are done with the instruction worksheet. So let's take it up. Okay, recall in my previous video, I mentioned that under the financial analysis in the business plan template that was sent to you, the first thing you should do before preparing the Tony Elumelu Foundation business plan is that start from, first thing is for you to fill this financial template first. Complete the financial template before you go ahead to prepare the business plan. This is because with the financial template, you have you have a prior knowledge and information of all the business goal, the expectation, the capacity, the target sales revenue per annum, the target profit level per annum, number of staff, capital equipment required. Everything will be reviewed in the financial template. So if your financial template is set, you can now go ahead and use the information to prepare the business plan. This is because in the executive summary, you need the information from your financial template. In your chapter 1, business overview, under business objective, you need the information from the financial template. Okay, in your marketing plan, you also need information from the financial template. So it is very, very important, even in your financial plan, so you need the assumptions from the financial template. So start from the financial template before you move to before you prepare the main business plan. All right, then you start by inputting your company. So I use Nigeria here. Then for the business currency, you can use dollar or your local currency. So I use Nigeria currency here, which is Naira. Okay, so after that, we'll now proceed. Okay, so what I did here is that I use information for a fashion business, okay, to prepare this financial template. So you just have to tweak it to your own business industry. And there are 3 products, so you are to provide at most 3 products or services in this financial template. Product 1 for this business is ball dress. Product 2 is gown. Product 3 is t-shirt. Okay. All right. So like someone who's into poultry can say product 1 can be crate of eggs. Product 2 can be sales of can be spent birds, and product 3 could be chicken droppings or manure, chicken droppings. Okay, so let's proceed. The next is for you to now fill the metrics that are going to be used to analyze your financial template. For company tax rate, I use 30%. For bank interest rate, I use 9% because in case this business wants to obtain loan from the Bank of Industry, their rate is 9% per annum. So in case you have an intention to also obtain loan to augment your capital, so you need to know the interest rate from the bank you want to get the loan from. So that should be reflected here. But if you are not obtaining any loan, you might even need to ignore this bank rate. Then inflation rate, I use 31%, okay, which is very close to what we have in Nigeria as at 1st of May 2024. Okay, so then furniture, for depreciation rate, I always advise you can leave it this way because these are the rates that came with its templates from Elumelu Foundation. But if it does not align with your company depreciation rate policy, you can adjust it to suit your company depreciation rate. Okay, so part B is growth rate. So for growth rate, TEF is they are very, very particular about funding businesses that have very good growth potentials. Okay, now you need to forecast your business growth rate per annum in this segment. So, and how do you do that? How do you go about that? So you need to have this at the back of your mind. This template, I prepared it as if the business is a startup business, and all the figures on this template are hypothetical. They are not real figures, okay? All right. So if your business is a startup business, it's a new business idea that have not been launched. So for year 1, your growth rate should be 0 because you don't have any baseline figures, okay? So you just continue to all the parameters in year 1 should be 0, okay? So having said that, now let's now go back to the parameters. For sales volume for the first product. Sales volume for the first product, which is ball dress. So it is expected that board dress in year 1 is 0 because there's no initial sales. Then year 2, it will grow by 20%. In year 3, it will grow by 30%, and it will maintain a 30% growth rate per annum after year 2. Okay. Same rate. Then for price of board dress is projected to increase by 10% per annum from year 2. The same thing is applicable to gown. Gown is also the same growth rate. T-shirt is also the same growth rate. Okay. So please let it be according to your industry that you use to forecast. Now the tricky part of this is that in your business plan template, that's the MS Word, okay, under the financial plan, there's a heading which is what? Financial assumptions. This is where you get your information that you are going to use to fill the financial assumption in the MS Word business plan template. So what you need to do is that under that assumption, you will say sales for board dress is projected to grow by 20% in year 2, and after which it increases to 30% in year 3 and maintain a 30% growth yearly. Okay, same is applicable to other products. Also, the price for our goods and services is also projected to grow by 10% yearly from year 2. This is the kind of assumption this person should have in our business plan. Okay. So once done with the revenue assumption, let's now come to cost. For cost here, for direct costs, don't forget your direct costs are those costs that increases in the same alongside your revenue. Sorry, they are costs that increases alongside your production outlay, okay, or your production volume. Once your production volume increases, such costs also increase. And what are those costs? For example, someone who is into cassava processing, your direct costs are what? Cost of cassava tubers, cost of packaging material, maybe cost of palm oil if you are making red gari. Okay, so then cost of transporting the material, the cassava from the farm to your factory is also considered into direct cost. If you are paying a labor, okay, for working with you, if you are paying that person per day, or per unit of item produced, that would also be considered as direct cost. Okay. So for this entrepreneur, the direct cost is projected to grow by, okay, let me see what we have here. Yes, the direct cost is projected to grow by 20% in year 2. From year 2, direct cost is projected to grow by 20% yearly. Okay, so let this be according to your industry, according to the nature of your business, the nature of your product, the trend in your industry is very, very important. Because it's a startup business, year 1 is 0. But if it's an existing business, you need to forecast growth rate. Okay, after direct costs, we also have salary will increase by 10% yearly from year 2, rent by 20% every 2 years, utilities will increase by 5% every year from year 2, marketing and advertisement will increase by 5% every year from year 2. So just make sure that whatever you are forecasting is in line with your industry and your nature of business. Okay, having said that, we have set a very good foundation for us to be able to forecast the growth rates for revenue and for cost. Now, the next segment is startup cost. Your startup cost, in this segment, you'll be able to identify the total cost required to start your business or the total cost required to expand your business. For this person is not buying land, Okay, the person is not buying land, no building and civil work budget. So furniture and fitting is budgeted at 500K, will be expended for that. Equipment and machinery, 1.8 million. Vehicles, no budget. Installation and internet, 300,000 is budgeted. Now, take a look at this. What you should do is this. These are capital expenditure, okay? If there is any capital expenditure that you are going to incur, but it is not listed on this sheet, you can come to anyone that is not relevant to your business and change it. For example, this entrepreneur is not buying land. What if the person needs a website? Okay, then you can just change the land to website, okay, and input a value for it. You can see this. You can also change the building works to another capital equipment that you are going to buy. Please note that while filling this segment, you are only expected to fill only this column, okay? Do not fill the shaded portion. If you fill the shaded cells, you are going to disrupt the formula that has been programmed on this template. Fill only this column, okay? So let me take it back to where it was before. All right, let's proceed to the next one. I haven't known the total capital for capital expenditure. The next is now opening inventory. This entrepreneur is allocating 1.5 million for opening inventory, then also 1.2 million for initial working capital, and 700,000 naira for contingency. A lot of entrepreneurs that it's from experience, so many mentees, the mistake they do is that they always apportion over 90% of the grant on rent and capital equipment, whereby they neglect one of the important factors in business, which is working capital. Okay, so please do not make that mistake. You ensure to allot enough budget for opening inventory, working capital, and contingency. This will help you to avoid liquidity crisis in your business. Okay, having said that, we'll move forward, we'll move down. This reflects that this entrepreneur needs a total sum of 6 million naira to start his or her business. Okay, so we now go to headcount. For headcount, this has to do with your staffing. Okay, staffing. For this benefits percentage of salary, if you are paying any benefit on salary for staff, let's say housing, transportation, every other benefit or salary or benefit that you are giving to your staff, including that is embedded in the salary, you need to state the percentage of such benefits. But if there's nothing like that, just leave it at 0. Okay. Now, you need to know that the information that you are providing here, the salary is per annum, is annual salary, not monthly salary. I've also seen some entrepreneurs make this mistake. Why in previous year where I marked the Elumelu business plan for in the program. So some entrepreneurs make that mistake. Please, it's not monthly forecast, it's annual forecast. So for CEO, senior management staff, we have only one person, and the salary is 1.8 million per annum. So you input the salary here, and don't forget to input how many are day one. So you have to fill them per year. Okay, don't forget that. Then we now move to the next tab. The next personnel is business development. This business development, no business development manager, so nothing is filled here, okay? But there's going to be a business development associate, and it is one person, so that's why you see one is filled here, okay? If at any year the number will increase, feel free to increase the number at that particular year. So assuming there was a manager, we should have inputted the salary here, okay? But since there's no manager, so you have to ignore that. So for the associate, the salary is 1.2 million per annum. Okay, so we'll now move to the next one, which is sales support. For sales support, okay, this person is not recruiting manager, but there's an associate and it's one person, okay, and the salary is now at 60,000 naira. Okay, don't forget, if it was a manager, you input the salary here and the number of staff in that category will be on these cells. Okay, all right, so let's now move to the next one. The next one is marketing. For marketing staff, this entrepreneur, for a start, no manager, but there is an associate, and we have only one person. Okay, and the salary is now there 60,000 naira per annum. Okay, IT staff, no IT staff. Who is backup support? No backup support, no back office support staff. Who is okay? Operations support. So this entrepreneur is saying that he or she is going to employ one manager, one operation manager, and that's why you have one here. Okay, and the salary for the operation manager is 1.440. 1.440. You can see it here. Okay, and there are going to be 3 associates on operation, 3 staff on operation, 3 staff. Okay, this number of staff can increase or reduce at any year, so you have to reflect that if that is applicable to you, and this is the salary that will be paid all the 3 staff per annum. Okay, so having said that, with this we are done with the staffing cost. Then we'll now move to operating cost. For the operating cost, we start from direct cost. I initially explained direct cost that is the same as what? Variable cost, and it increases and in the same proportion with your output or volume of production. So now, for raw material, this entrepreneur is budgeting 8.8 million, okay, in year 1. Direct labor, no direct labor. That means everybody is going to be based on salary, no direct labor. Okay. Factory about 80K, inbound transport 120K. Recall, inbound transport are those transport you use to transport your raw material to the factory, to your production site. Okay. Fixed costs are those costs that do not change in the same proportion with your output. Okay, like salary, rent, so everything is here. I have also seen some entrepreneurs, they'll come here because they see salary, they come and pay something here. Please don't do that. Your salary is already auto-generated because you've already provided the information before now. So just leave here blank, okay? So these are all the costs, fixed costs that this entrepreneur is going to incur. I haven't said that. We'll move to the next one. Here is revenue. This is your sales forecast. You can see the relevance of this template to the MS Word business plan template. That's why you should fill here first. Now your sales forecast information is here. This entrepreneur is the first product is board dress, and he or she is forecasting to sell 25 board dresses per month at the rate of 30,000 naira per month. Okay, so you only fill the monthly sales volume and sales price. Leave the rest. Okay, move to the next one. Except there's seasonality. Okay, except there is seasonality. Maybe there are periods that your business the volume will increase or reduce. Okay. Now, here is percentage of sale. Like for example, if you forecast to sell 25, maybe it's only 10-20% that you are going to realize. You can reduce this percentage, but I would just say leave it at 100%. Don't stress yourself. Myself, you have a finance background. Okay. So having said that, we'll also move to the next product, which is a gown. So this entrepreneur will sell 27 gowns. Okay. This entrepreneur will sell 27 gowns, pieces of gowns at 20K per one monthly. Okay. Then we move to the next one. So you fill here again, t-shirts. This entrepreneur is projecting to sell 35 units of t-shirts at 15,000 naira per unit per month. Okay, don't fill any other place. You just leave every other thing to auto generate. Now let's move to the next segment, working capital. If you are buying from your supplier, item from your supplier, and they give you number of days to repay. So you input the number of days here. So this person is not, it does not have facility, credit facility from supplier. So it's going to be 1 day, the same day you buy and pay. So then if you are going to sell on credit to your customers, you need to know how many number of days are you going to give them to repay. You put the number of days. So this person is not selling on credit. Inventory, for your inventory, your stock, for you to avoid running out of stock, this entrepreneur is saying that every 30 days he or she will be restocking. So you have to input your own stocking days. Yeah. Okay. Having said that, we'll now move to startup financing. So here it's talking about your sources of finance. Recall that this entrepreneur needs 6 million naira to start this business. Okay, and he or she is saying that all the 6 million naira will come from grants. That's why we have 100% here. So, but if your startup capital is more than the $5,000 grants that TAF is giving you, so you can now put other source of revenue like personal saving. How many percentage will come from personal saving? How many percentage of that capital will come from equity financing? How many is going to come from loan? Okay, then what percentage will the grant take? But at the end, we should have a total of 100%. Okay, we should have a total of 100%. If not, this will not fly. So if you are bringing in equity, you feel yeah, but if there's no equity, leave this place blank. If you are bringing in debt financing like loan, you need to let us know what year is the loan coming in, what amount of loan are you bringing in, how many years is the repayment period, and at what year will the loan end. Okay, you feel it here. All this information is required to auto-populate the financial template. Okay, so the same is applicable depending on the year that the loan is coming in. If you're not bringing in loan, just leave it blank. Okay. I haven't said this. We are done with this financial template. We are done with the financial template. But here is the trick. Do not jump at going to submit it. Please don't do that. You need to check. That checking is very, very important to be sure that everything aligns. So come to your income statement. Let's see what we have just done. From what we have done, this business is projecting to generate 21,780,000 naira in year 1. And the direct cost is 9 million. Gross profit is 12,780,000 naira. And let's see whether this business is profitable or not. Wow, this is serious. Oh my God. This business is going to be making a loss of over 5 million naira in year 1 and a loss of over 1 million naira in year 2. That means that this business will only be able to break even and start generating and start making profit in first quarter of year 3. But do you know that there's nothing wrong? The bitter truth is that so many businesses, they don't start with profit. Okay? There's nothing wrong with that, but let me show you the issue. Check your cash flow balance. If you have a negative cash flow balance, then there's a problem. Your business is not viable. It's not going to be viable because you are going to have liquidity crisis. Let's check the cash flow balance. Net cash flow balance for this business. See, for 3 years, this business is going to have liquidity crisis. That means this business will die a natural death. They say cash is king in every business. It's like a lifeblood of the business. Without cash, how will you operate? You can't meet your fixed cost with this kind of projection. So that means this business plan will be trashed. It cannot proceed in the program. So what you should do now is to go and check where the issue is. Let's check. How come we are projecting to generate 21 million and we are making such amount of loss? Wow, can you see? Salary alone is 13.9 million. This is serious. That's where the issue is. So let's quickly go and adjust the salary. Salary adjustment. So you come back to the assumptions, scroll up. Let's see where which person's salary that we need to adjust. Since it's a startup business, which person's salary are we going to adjust? Okay, what I will just do here is that The CEO, 150, 1.8. Okay, let me just reduce the CEO to 1.5 per annum, so 1.8. Okay. Now, what else? Who else are we going to adjust? 1.2. Okay, let's leave this one for 1 million per annum. Okay. Let me see again. 960. I think that operation staff, the operation staff, I would just recommend that this entrepreneur, in your year 1 and year 2, remove operation manager. So change it to 0. Okay. All right. So let's go back and check if there's any difference. Wow. So this business will now break even in year 2, but go and check your cash flow again. So we are still having issue here, 2 years of negative cash flow. So come back to the assumption. So what we can do now is to say, okay, let's start with 2 operation staff in year 1 and year 2. Okay. Another thing I would do is that I can go and either increase my price or increase my sales volume projection, so that I know that, okay, yes, for the sales volume projection, I would just say for board dress, I just increase board dress to, let's say, 45 or 46. Let's be at 46 per month. Now let's come back and check. Good. So now, but this is not still okay until you confirm your cash flow. Now we have positive cash flow throughout. Okay, that means this is good to go. Check your balance sheet. Is it balanced? Yes, perfect. Balance sheet is balanced. Let's check our grocery. You can see the analysis of your business plan for 10 years. So now this is a viable business that can scale if all the entrepreneur implements the right processes in the business. It can really scale. All right, so at this junction, we have come to the end of this video. Don't forget to populate the financial templates first before you create your business plan narrative. That's the MS Word. And also ensure that the information on this financial template must align with what you are preparing in the MS Word template. Okay, thank you for watching this video. Follow me in all my social media handle at Matthew Philip. I wish you all the best. I'll see you in my next video. Do have a nice day.